looking at the major U.S. stock averages, we're seeing positive trading for the major equity averages. We did have a mixed open, but we also got mixed earnings. So joining me now is Alan Valdes of SilverBear Capital. Alan, happy Halloween to you.
Oh, Remy, thanks a lot.
Well, it may be Halloween, but the markets aren't spooked. We saw the equity averages post strong gains for the month. But as we head into the rest of this year, we still continue to have a lot on the plate. We have expectations of tax reform, expectations about who the next Fed chair will be. So what do you expect to see?
Yeah, it's probably going to be a week where things trade kind of flat. I mean, we're up right now, but we were down earlier. So you probably think, because traders will be waiting for the Fed, see if there's going to be any kind of decision, which we don't think at all. And, of course, Trump naming the new Fed chairman or chairwoman. The betting now is Jeremy Powell. It's going to go that way. So if it is, that's status quo. He runs the ship the same way, basically, Janet Yellen did, so we don't see much of a change, and we don't think he's going to go out on the limb and nominate Taylor, who's a hawk, and raise interest rates and be a problem. But I think in the long run, it's all about earnings.
And of course, we have the U.S. jobs report coming out at the end of this week. A bounce back is expected given the aftermath of the hurricane, which was reflected in the September report. But what do you expect to see in terms of rate hikes for the rest of this year as well as going forward into next year?
Well, you're probably going to see a quarter point in December. That's what they've been telegraphing, and they usually keep to their word. I don't think we'll see anything this week at all out of them, no change at all. And that'll be it, obviously, for the year. I think next year you could see 2, depending on the market, maybe 3. I don't know if they want to be real aggressive. I think if they see the market starting to capitulate and get a little wobbly, they'll cut back. Because remember, they also want to shrink the balance sheet. So they want to shrink the balance sheet and raise rates. I'll be honest with you, I don't know why they want to shrink the balance sheet. I mean, that money's just sitting there. But I think you'll see 1 more this year in December and maybe 3 next year.
And very quickly, Alan, we only have 55 days until Christmas, and that is unbelievable. But tomorrow does mark the first trading session of November, so it does make sense. But given that there are a handful of risks, whether we're talking about political developments down in Washington, D.C., or geopolitical concerns that involve North Korea or even the Middle East, how are you factoring that into your overall strategy as we head into year end?
It's hard to factor in because you're dealing with 2 guys here, the president and in North Korea and other places of the world that are so unpredictable. I mean, they can change it on a dime, and we see it. We see, a tweet here or a reference out of North Korea about something or tests a missile going over Japan, and it can change the complexion instantly. I mean, you wake up, you go to sleep, the futures are up, you wake up, they're down because something happened overnight somewhere in the world. So there's really no way to hedge this anymore. It happens so quickly. Trouble is, I think a lot of traders now are just saying, okay, yeah, it's another missile, yeah, it's another tweet, and they're really not taking it serious. And then that's the one time when something does happen, they're not prepared for it. So it's a tough market when you trade on, especially global political events. It's just, it's the toughest market I've seen in years, to be honest with you.
Okay, Alan, well, thank you so much for joining me on Halloween, and as always, thanks for your insight.
Thank you.